You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 12th day of April, 2019. Everybody's been working for the weekend, and, well, by golly, here it is. Thanks for joining us. If you're returning, welcome back. If you're here for the first time, a special welcome to you. So glad to have you with us. We are in our second decade of broadcast history. You can catch us each and every day right here, 12 noon Eastern, Monday through Friday, every trading day. Now, we've got a chart up, the S&P 500. If you can't see the chart and you want to see the chart, go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. 30 seconds, you'll be registered. That gives you one-click access to the show each and every day. The discussion, charts, chat box, you name it. And, of course, answers to your questions. If you should find yourself away from the office, away from the desktop, just grab the cell phone or the tablet and punch in youtube.com/CFRN. CFRN/live. Pretty easy, right? youtube.com/CFRN/live, and there you will find at 12 noon every trading day a live real-time simulcast of this show. And that's made possible by the good folks at YouTube. Thanks, YouTube. All right. What a day. What a day. How about you? Oh, hey, Tim, I see your question in the chat box there. Yeah, I'll be happy to address it. I certainly will. Let me get rambling here just a moment, and then we'll do that, okay? I saw a comment in the regular channel that somebody had made about copper. I don't think it was you, but I'll go look at your question here. Maybe I'll check it out while Michael's doing his part, and then I'll have an answer for you when I get back. Now, this chart I have up, it is a 30-minute chart of the S&P 500 Emini Futures. Most of you are familiar with futures. If you're new to the community, new to trading, you might, yeah, it's like options, right? That's what most people tend to think. Futures, oh yeah, it's like options. And they all expire worthless, or most of them expire worthless. Now that is true, I'm told, true about options, but not futures. So we have to kind of demystify that. Another thing that seems to confuse folks in the beginning, because it's confusing. So if you're confused by it, you're in good company, real good company. There's this thing called the S&P Cash Index. Oh, most people go, well, I see. So in other words, this one I just pay cash for. I don't have to use any margin. No. You know, some of the terminology that they chose, the empirical they, whoever they are, before we all came along, some of it doesn't seem to quite make sense, but hey, it's what they call it, so that's what we're going to call it. S&P Cash Index. So hang on and let me drag this other chart up here. Okay, I think we have it. S&P 500. They call it the cash index, but here's the rub, bub. You can't actually buy or sell it. It's not that kind of index. The futures were created. The futures are a derivative created so that you could trade the S&P 500 index. And when I start talking about the cash market and the futures, I mean, even folks that have been around for some time look a bit confused, and it can be. The cash index, you'll notice these gaps here. Almost daily, it seems. That's because this is closed at night. Closed at night? I thought you said it's not even a thing that you can buy or sell. Well, it's not. But I'm telling you, when the market closes, when stocks close, the index stops computing. Now, futures close every day for an hour, from 5 p.m. Eastern to 6 p.m. Eastern. Last night at 6 p.m. Eastern, well, at 5 p.m., that ended the Thursday session. And at 6 p.m. Eastern last night, that began the Friday session. Okay, with me? Here, same hours as the stock market, 9:30 to 4 Eastern. Think about the term futures. Okay, so this derivative that was created, it's kind of attempting to tell you where this thing's going to go. But what I suggest is that you go and you learn to look at this, accept it for what it is, gaps and all, right? Let me give you something to compare. Hang on. Hang tight. Now, these are both 30-minute charts. It's just that one is the derivative futures, the other's the cash index. Okay, I want you to look at yesterday at 11:30 Eastern. See how we got down below the BBC, and then we walked that line for an hour, 2 hours, 3 hours, 4.5 hours really, and then the market closed. No overnight, no Globex here. It didn't crank back up until 9:30 this morning, right? Okay, so that first close was 11:30. Now let's go look at this chart. Let's go to 11:30 yesterday, right there. Okay, now what do we got? Well, let me pull this one back up. I think we can see them both at the same time. Yeah, how about that? Close. I'm going to scrunch. Well, that's what we want to see. Okay. So this 11:30 correlates with this 11:30. You with me? Good. See how this walked the line? A little bit of a head fake there. There's just enough movement to the south side to start a bearish cross that never got finished. It was foiled. Here, we had a bearish cross right after that 11:30 candle. Leg, retrace, leg, but we weren't able to put in a lower low. And that's always a pretty good heads up that the current move, current intraday trend, or overnight trend period, might be running out of get up and go. Okay. So this morning, here's the open on the cash index. It spiked up to what, 29.11. As you can see over here on the futures, there's always going to be a little bit of a difference between that cash index and the futures. We ran up to our weekly trading zone at 29.13/14. Some people will tell you that the futures indicate the future direction of the cash index. I'm more of the school that says the cash index gives you an idea where the futures are going to go. We could both be wrong, right? It's a thing. This S&P 500, the reason I even bring it up, the reason I think it's important that you are aware is because when you're driving down the road, you listen to the radio, when the news comes on, they're always talking about the Dow, which is only 30 companies. And depending on your radio station, they might mention the S&P 500. On all the television financial shows, they talk about it all day. But they're talking about this. The only time you'll hear them talk about futures is Maria has a future show, I think on Sunday. And before the market opens each day on channels like CNBC, they'll talk a little bit about futures. They might even have something scrolling on the screen. But the second that bell rings on Wall Street, they're done. And it's all about this. All that talk about something you can't buy or sell. Really? Yeah, it's true. So whenever you hear a number quoted, be it on the radio, be it on the television, read it in a newspaper, just remember, they're talking about this. People who even know what futures are a small segment of the trading population, and people who actually trade them, even smaller. And it's simply because they don't know any different. They don't know any better. Nobody told them. You with me? Because once somebody tells you, and once you experience it, it's real hard to go back. Now, I've talked about this before. I left equities when I found futures, and there's a laundry list of reasons. I'll give you one real good reason. Just right up top. Oh, and to those of you that are in this current alert, it's not done yet, but that bell's for you. You take your handy dandy calculator, okay? Current price on the S&P, what is it? 2909, sorry. Okay, let's do that. 2909. Now, how much does the S&P pay? $50 a point, right? Okay, so we're going to take that number, 2909, the current price of the index. 2909, we're going to multiply that times $50. That comes out to $145,000. $145,450, to be exact. Okay. Now, if you trade the S&P intraday, or any of the indexes, S&P, Dow, Russell, NASDAQ, most brokers extend $500 intraday margins. So what I'm saying is for $500, which is really like a deposit, because you're going to get it back if you honor your stop and do the right thing. You're going to get that $500 back whether the trade was profitable or not. You won't get back the amount you set for your stop loss, but you get it back. Don't let that confuse you. Don't overthink it. I'm just trying to explain it in a way that might make sense. Okay? So, for now it sounded a little bit shady if it wasn't the Chicago Mercantile Exchange, the CME, which itself has a current price of $172 per share, right? When I hear for $500 you can control $145,000 of S&P 500 best of breed equity. And you have to remember too that all of these indexes are best of breed by nature. They're programmed to go higher. Really? Yeah. Bring up the S&P as an example. Find yourself a chart that goes all the way back to the beginning when it all started. What you're going to notice is there's some dips along the way, but however many years you go back, it's going to start in the lower left hand corner of the chart and it's going to go to the upper right. Now, that almost sounds like shooting fish in a barrel. Trust me, it's not, okay? But it would do everyone well to remember that over time, the S&P, the Dow, the Russell, the NASDAQ, they're going to go higher. Yes, the S&P can fall from 1550 to 666. I saw it happen, and then I saw it recover. And that puts us up in this area that we're at now. This daily chart I have, well, you know what, I'll show you on this one because we can pull in all the data. ES, here we go. And we're in the June, oh, I don't want the June contract, I want continuous contract. There we go. So now I'll put this on daily. And here we go. I'm going to keep scrolling and scrolling. You know, I'm not quite sure how far this thing will let me go back. But let's find out. I think that's it. Maybe not. Okay. There's that 666 I'm telling you about right there. So this thing is still, you know what, we're going to have to go, let's just go monthly. That'll make it simple. I think it will. Here we go. Monthly. Okay. So this thing goes all the way back to 1998. Okay. And it was about 2000. It was 2005 5 when I got with the program. You'll notice a bearish cross here, right? Bullish cross, bearish. Now this is the futures. This is the one you can buy and sell. Bearish cross, double bottom. Look at that price back then, 800. Leg retrace, leg retrace, leg retrace, and boom. Look at that. Look at that run. It's pretty impressive, don't you think? Now, there's the 1550 number, give or take. This was the real estate crash. This was the big whammy, right? This was the .com blowing up. This was real estate blowing up from 1550 to 1600. I mean, from 1500 and change to 666. These dips will happen, but from here to here. Don't need a degree to see that what I said about it being programmed to go higher is in fact true. Then don't just go long and don't use a stop because, well, the guy said, you know, it just always goes high. No. You can't do that. I just want you to understand some of these real basic things about this market and how markets work. You know, so many people will tell you, well, you can't trade the Dow the way you trade the S&P. You certainly can't trade it the way you trade copper. And no way could you use the same method on soybeans because they have their own unique personality. Some like long walks on the beach. Some enjoy a good movie. I'm not looking to date. I want to trade. And those personalities, I'm not denying that they exist. They just don't mean anything to us and our methodology. When there are buyers on the bid and sellers on the ask, price will channel back and forth, back and forth, back and forth. I'm sure you've seen this before. Currently 10 levels deep. What do we got? 4,200 on the bid, about 4,000 on the ask. These are the different price levels and the number of contracts being bid on or being sold at these prices. Okay. Now, what you just saw there on the DOM, which stands for depth of market, it translates into this on a chart. Leg, retrace, leg, retrace, leg. See, this thing will keep going down until it can't put in a lower low. See this low right here? See this low? This was your heads up. Hey, wait a minute. This little trend might be over. Sure enough, the CFMA1 turns blue. Cycle indicator down below turns blue. And we're off. Okay. You gotta learn to watch these little head fakes. We talked about this in depth yesterday. In fact, yesterday on the program, we had said we drew this. It was just such a beautiful thing. You know, normally those only go out in the Telegram channel to the passport holders, but it was just such a nice thing. I thought, you know, let me just share this with all the good folks in the community. And I had the numbers on the screen. I guess those must have deleted them at some point. But I believe we were talking about 2889-ish, somewhere in there. And we said the target, you know, reasonably would be the zone below. I also then went into great detail about how zones are an area, like fibs, even though they put an exact price point on your chart, it's an area. And when you have a dynamic, we talked about this yesterday, you got that nice move, and then you end up back at near that same price in that neighborhood. Well, anyone that took this ride made good money, and so they would love to take that ride again. And anybody who missed this ride, well, they don't want to get left behind again, waiting for that limit order to fill. So they come in early. Price doesn't get all the way down to the zone in this instance. Sometimes it just doesn't. Like here. Here, there's a good reason. Okay? Only 3 things happen at a zone. The most common thing is consolidation. So a price hit the zone here. 1 hour, 2 hours, 3 hours, 4 hours, 5. 5 hours of consolidation there. An hour here. Hour and a half here. Hour here. Hour here. The second most likely thing to happen is called rejection. Price touches the zone, and it's almost like you touched the hot stove and jerked your hand back. Just boom. This got rejected up top and down below. Okay, that's the second most likely thing. The third and final thing, only 3 things. Think about that. Because sometimes there's so many choices to be made. Am I going to look at my RSI or my MACD, my stochastic, and nothing wrong with any of those, my advanced decline. They all do, I assume, what they were created to do. But with so many choices, it's hard to find a good trade because you got 9 things on your screen saying get up and go, and you got 9 other things saying, ooh, you better set this one out. Paralysis analysis, or analysis paralysis, I think they call it. You follow me on that? That's why we try to keep it simple. Trading's not easy, but it can be simple. So we went from zone up to the zone, consolidated there for an hour, up to the next zone, back down to the zone, up to the zone, back down to the zone. And this time, the third thing that can happen is the slice. It sliced through, pulled back up to the zone to confirm that it is now going to be good resistance. And the highest probability thing that could happen would be that price would return to the target. To the weekly trading zone below. Price is always trying to get to a zone. Whether it's the one overhead or the one below, the market's on a mission. It will go to one of these zones, and one of 3 things will happen. Now, I've given you just a basic overview and understanding, but if you can grab a hold of that, and if you have the weekly trading zones, I hope it's sinking in how important that could be, how relevant. Now, we didn't just have a lucky week this week because we don't believe in luck and we don't gamble. The zones have done the same job every trading day since we first published them for the public, and that was December 14th of 2009. Coming up on a decade of zones. And you can go back and look at old historic charts. Just Google CFRN weekly trading zones. Thanks to the good folks at Google, you can find all kinds of stuff. And we got stuff on our website too. And it's been doing the same thing consistently. We know that everything in trading, everything works some of the time, but nothing works all the time. At least I don't know of anything that works all the time, except this. I'm not bragging, I'm not boasting. Just as the S&P 500 index was created, designed, and programmed to move higher over time, because if one of those companies gets weak, misses earnings too many times, they'll kick them to the curb and bring in a new strong bull. That's why as a group, it's always moving higher, except when it's in a retracement, okay? All right, so you've got something that's consistent. You understand how price is going to behave before it even gets there. Throw in our indicator set, our methodology, which is so brutally simple. Some people take a look at it, well, that's elementary. Hey, I've been at this 9 years, man. Goodness, I used the trend, I used the tricks, I got my Bollinger Bands. Yeah. And again, if what you're doing works for you, I'm not putting anything down, not any methodology or any kind of indicator oscillator. If what you're doing is working for you and you're consistently profitable, don't ever let a guy like me talk you out of it, or any other guy talk you out of it. If you're not consistently profitable, well, there might be some reason in the things I'm saying here. So it didn't get all the way down to the target. Buyers came in early, pushed it up. Bullish cross, blue and climbing, down below on the cycle, blue and climbing. That's music for the eyes, okay? Even though this didn't go to the target, it was profitable to the tune, I think, of about, it was like 4 points, 5 points, whatever it was. Somebody in the audience probably remembers yesterday, and you can ask them. Or somebody put it in if you remember. All right, so we get the bullish cross. Last night in the workshop, we spoke about this at length. We had pulled up to the weekly trading zone, and I boldly said, folks, I think this may be a head fake. That's what I said. I also said, but I don't really know what's going to happen next. Nor does anyone, not man, machine, indicator, oscillator. God knows what's going to happen next, but none of us do. A lot of people try to convince you they do, but just trust me, they don't. Anybody that tells you they know what's going to happen next, ask them to change the past. Because see, that's in the same wheelhouse. If they can't change the past, well, I doubt they know what's going to happen next. Now, you can have a high probability idea of what's going to happen next. Well, that's very, very doable, okay? So I said, I think this is going to be a head fake. So put out an alert to get short. I mean, that's what you do, right? I said, now there is, the possibility that it's not a head fake. It's perhaps the real deal. So I followed up a few minutes later with an alert that said, hedge the ES. In other words, an alert had already gone out with a price down here. I think it was at 28.89. I'll go look at the alerts in a minute and tell you for sure. But so we knew we wanted to get short with this, once again, as our target, or these lows, right? But because of the way this thing's set up, I mean, price is above the BVC, and whenever price is above the BVC, what do we expect? Higher prices. Do you see how I could have shot myself in the foot in front of everybody that was in the workshop last night if I had insisted, oh, this has to be a head fake. There's no way this thing's going higher. I mean, that's what I thought, but see, I don't know what's going to happen next. So we hedged it with an alert here. One of the two is going to trigger. You can see which one it was. It ran up to the zone overhead. Now remember, these zones went out to the partners and passport holders back Monday morning, 6:15 a.m. Eastern, right? Now, this looks like a slice, but it's really not, because this candle before it spent some time here. If you go to smaller time frames, you can see just how much consolidation takes place. A lot happens inside of a 30-minute candle. Leg, retrace, right back to that zone. And from 29.02, we rallied right up to 29.13/14, the next zone overhead, riding the back of this blue CFMA1. Now, I showed you an example of this yesterday. See, getting long here, that's a very attractive proposition. This is a different story. Yes, it pulled back, but you've got dynamic resistance overhead, red and falling, red and falling. Doesn't mean price can't plow its way through there. It can and often does. This is as high a probability as I've ever stumbled across. This is a high probability opportunity, but you have to understand that little caveat there. Okay. All right, I've rambled way too much. I just realized what time it is. Michael's probably ready to get in here and share with us what happened in the live training room today, so he can get on with his
get the numbers Get the numbers and all that stuff, Dwayne.
All right, I'm good. Okay.
Normally.
Okie doke. These are the cash markets from around the world. The Dow currently down 42 points. NASDAQ, well, let me refresh that. There we go. Now that's correct. The Dow is currently up 224 points. NASDAQ is up 23. S&P 500 is up 15. And the Russell 2000 is up 4. We got a mover and a shaker. The Dow, that's almost 1%. In the commodity basket, crude oil up 54 cents, trading 64.12 last, and that's a gain of almost 1% for crude. Gold is up $1.20, trading $12.94.50 last. Still hanging out below that 1300 again. In the Asian markets, at the close, the Nikkei finished the session up 159 points. Shanghai was down a little over a point, and the Hang Seng gained 70 points on the session. In European markets, at the close, the FTSE posted a gain of 19 points. The DAX was up 64, and the CAC was up 16. No movers, no shakers. Now, that gave us a mixed day in Asia, a green day in the European markets, and it's a big green Radio Friday right here in the US of A. I'm going to pass you off to Michael. I got to take this call that just came in. Now, Tim, I'm going to get to your question the second I come back. And David, I'm going to get to your question as soon as I come back. Okay? So don't run off. I'll have answers for you. Okay. Now, Michael, you may take it away.
Excellent. All right, I'll take it away. We'll bring it back all the way over here, across the country.
What time's that thing this afternoon? It's at 5? Yes. Is that right, Val? It's 5, right?
Yes, it is. 5 o'clock.
Okay, so those of you that have been on the trial this week, the Logic 247 trial, we're having a Q&A session this afternoon, 5 p.m. Eastern. I'll ask Valerie to put the link into the chat box. And if you have any questions, if there's any confusion, you need something sorted out or explained, by all means, just click, come to that Q&A session this afternoon. You bring the Q's, and I'll do my very best to bring the A's. Okay? All right. Michael,
all right.
It's all yours.
Thank you, sir. All right, so everybody should be looking at my screens right now. We did something unusual today. We placed a trade on the Russell. Look at that. I'll get to that in just a minute. All right, so let's bring this thing up here. And we'll go here. Good afternoon, everyone. Today is Friday, the 12th day of April 2019. If you have not taken a free trial, go to the homepage here at CFRN.net. In the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page, where all we ask for is your email, your first name, and how you found us. Click on the submit button. When you hit the submit button, you will be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So click the confirmation link, and then you will get all the information you need to get into the live training room and take the free trial. Okay? Now, today, we ended up with a yellow day. We went a little further than we normally do as far as time goes, because we put a gold trade on at the end, and it was going to be a red day, but we picked up 9 ticks on that gold trade that made it a yellow day. So today we lost 8 ticks on crude. We made 9 ticks on gold. Put us up 1 tick plus $10. Took 6 trades today. On the month, it's a really slow month. You know, I went through year over year for the past 6 years what we've done in April, and you know, I would say the average is about three grand per month in April is the norm, and we're going to need some pretty big days next week to get there, because in the next 2 weeks, we have 2 weeks left, I think, in the month. 2 business weeks, 2.5 business weeks left in the month of April. But we do have Easter, so next Friday. So we have really 2 business weeks left. It's a slow month so far, but you know, positive every day. On the month, we're up 733. On the year, we're up 7,186. That's over 65 days, averaging 110 bucks a day. Okay, let's minimize that. We'll go see what we did and didn't do. On the gold, we missed this one right here this morning. That would have been a break-even trade. We took this one, which was a break-even trade, and this was the one at the end of the session. You can see right here, 1136 was the close of this candle. I don't think it was 1136 when we finished. It was probably 1133 or 4 or something like that. But anyway, we picked up 9 ticks on that. It gave a follow-up trade. I'll draw you the trend line and show you. Right there was a follow-up trade to pick up some more if you wanted to. And there was one more follow-up trade right here. I'll draw another trend line for you. Right there. Let's see. So there was probably another, I don't know, 5 or 6, 8 ticks in there. The euro today gave us nothing. Right? We don't have anything on the euro. No. I was complaining all morning about how the markets weren't doing anything. It started out right here and it ended right here. So it ended where it started and didn't give a single trade set up in the morning. During the break, there was a shorting opportunity there. And looks like another one right here for that leg down. But that was all during the break. And I suggested to everyone that they keep watching the markets during the break, because the European markets closed and there would probably be some opportunity. Now, crude oil, we started out right here with crude and we stopped out. I missed this one. I wish I would have gotten it, because that would have made it up. But I missed it. And you know, that gave some profit. We followed up over here with a break even. Okay, now this level right here that you see in the, I don't know, well, it's actually red is the color, but I put that on there on Wednesday morning, and I said the market is going to come back to that. As a matter of fact, last night in the partners meeting, the market was right here when I was, yeah, 10:14. The market was right here, and I said by the morning, look for it to get back up there, and it did, and then some. And you know, I had put out, well, call options, like the 64 half options were $280 last night, and right now, let's see what they are. Yeah. They're $310. So, not a bad gain overnight. Anyway, during the break, let's see, there was a bounce off the BBC right here. That probably would have been a break even for me. Then it got really choppy, and it's looking like it's trying to give another short trade right now, but it hasn't. Okay, and we'll look at the ES really quick. We had one trade opportunity here on the ES that we took. We had a break even on that. Then it gave this big leg down, but it didn't give any trade setups. Okay. Right in here, we broke dynamic support. It did give a trade setup here. It looks like, what time was that? 10:47. And somehow I missed that. And then it went down toward the zone. I thought it was going to get all the way to the zone, but it didn't make it. Turned around, and now it's trying to climb back up to this zone up here. Okay. But we didn't do anything other than that one break-even trade with the ES. Now, we looked at the Russell today because the markets just weren't moving. The Russell was. And we grabbed a Russell trade right here. We ended up with a break-even on it. You know, if you look at what happened afterward, there was a nice short trade right here. This is a beautiful short trade off the BBC on the Russell. And then it changed directions and gave a long trade right here off the BBC, and another one right here. And now it's getting really choppy. Okay. Next week is a holiday week. Next week there's no trading on Friday, so gotta keep that in mind. And that was our morning. We ended -8 on crude, +9 on gold, so +1 tick. Let me bring up this again. And so today's the 12th day of April 2019. We lost 8 ticks on crude, made 9 ticks on gold. Put us up just a little bit on the day. Took 6 trades to do it. On the month, 733. On the year, $7,186. That's over 65 days, averaging $110 per day. Okay. This has been a really slow month. In the room this morning, I went to all the other Aprils that are on the spreadsheet, just so you can see. Where's my cursor? Here it is. April last year, $4,200. Well, $4,300 really, just about. April the year before that. Hang on. There it is. 3,000. April the year before that. Hold on. 3,300. April the year before that. There it is. 5,200. What year is that? 2015. 5,200. April the year before that. 7,500. In April the year before that. Hang on. I don't know if I didn't calculate the annuals before that. But anyway, so you can see this is really slow start. But the month isn't done yet. We still have 2 weeks left. Okay. All right. If you have not taken a free trial with us, go to the homepage at CFRN.net, and right over here on the right-hand column it says 5-day free trial apply.cfrn.net. Click on that, and you will be brought to this page where all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit that, you will be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready. And John is in the audience too. I just did.
Okay, clicked. Hey, wait a minute. This button is unclicked. Do I sound louder now?
No, it's actually worse. Quieter.
Really?
Yep.
Huh, because that's the amplifier button. Okay, now the amplifier's off. That sounds mo better?
Oh, I mean, either way, it sounds okay.
Right.
But you were a little louder before you clicked it.
Well, I've unclicked it now, so I'm back to where I was.
Okay, that's fine.
Yeah.
That's fine. That's normal. That's normal.
Okay, someday we're going to get it all right. And whoever introduced me to Pro Tools, which the guys in the channel brought it up. Hey, did you know one of our guys used to own a record label?
I did not know
I
that.
think it was David V that was telling us about it. We had to kind of pull it out of him. He wasn't like boasting or anything. But they recommended some audio tools for me to try. Pro Tools it was called. But guys, unless I'm missing something really obvious, you can mix and do all kinds of clever things with pre-recorded stuff. But it doesn't appear that you can actually take a microphone and record with Pro Tools. Again, it's probably obvious. I'm missing it. So if you can help me out with that, it'd be much appreciated. Okay, recap of the recap.
Today we had a yellow day. We didn't make the goal for the day.
Okay. Well, that's the truth about trading.
And we didn't miss much today. There really wasn't a lot of opportunity today. There really wasn't much opportunity at all.
Well, you deserve
during the break there was.
Anyway,
but
there you go.
Give me a ding anyway. Thank
That
you.
bell for you, man.
And that was for me. Going into the weekend,
Yep.
got a ding on the bell.
Okay, so high probability trade setup, high probability trade setup. I don't know what else I can say about those. Hey, John, welcome to the show. Are you there? Okay, to you, Tim. Let me bring up that copper real quick that you had a question about.
Yeah.
GHGK9.
I looked at copper in the room this morning. It didn't have a lot of volatility.
Really?
I mean, nothing.
Okay.
Nothing really.
This,
today.
let me get back to the 30-minute. All right, and so, okay.
That's John.
No, that was actually somebody else. So,
Oh.
got to get my Telegram up. Guys, we are in week 36. Did I forget to put that in here? That's okay. So this is what the Telegram channel looks like. I'm going to get to your question in just a second, David. I just want to get down to... These were the Sunday night alerts, and the rest of everything in the channel, I have not had a chance to go in and recap it all yet, but I will be doing that. Hopefully I'll get it done prior to the Q&A. Hey, John, be right with you in just a second. Now, that copper that you're talking about, Tim, did I fly right past it?
Call
There we
that
go.
or what?
I'm sorry?
There it is.
I said, did we call that or what?
Yeah, yeah. All right, so your question, Tim. Let me go to your question. Oh, that's in Telegram too. Okay, let me see what happened. The alert was to consider being long at 29085, and 29085 happened right there, 29085. And you were waiting for a pullback to the BBC, if I read that correctly, Tim. And it didn't pull all the way back, and so you missed that. Now, let me say this. In the live training room, on the range chart, there's a rule for everything, and for the methodology to work in your favor, then you have to follow those rules. When you move out into the larger time frame and you are trading discretionarily, to coin a phrase, it doesn't have to touch. Now, you can wait for it to touch, but you don't have to. In the live room, you do if that's the high probability trade that you're going after. Okay, and then and if you need any more help with that, Tim, just hit me up in the Telegram. And to your question, David, how do you get this Telegram thing? Let me show you just real quick. Open a browser window and go to Telegram.org. And do you have an official channel, John, in Telegram now?
No, I don't. No.
You don't? Okay, we'll have to get that going. So, David, you can put it on your desktop, put it on your phone, iPhone, Android. They have an app for every platform. The web version, the PC version, the Mac version. Okay? It's free. It's fast. No advertising. It's one of the slickest things I've ever seen. And I'm so glad we stumbled onto it. I thought it was going to do one thing for us, and it's done many things. We got channels for videos, and we got channels for the concierge alerts and the weekly zones, and boy, it goes on. And then there's the main alert channel. Okay, and some of you have enjoyed this week in the trial alert channel, where it's a carbon copy of what goes on in the regular channel. And there's some great discussion groups too. So I hope you'll all join us. John, welcome to the show. What do you think? What's going on?
Thanks very much. Well, I put a tweet out this morning basically saying I think the market's headed for all-time highs. Just the ability of this market to keep coming back off every dip is really extraordinary. And a couple of big things happened. There's a Chevron took over Anadarko Petroleum for $33 billion. Could be a sign that the oil market's going to be improving from here. And secondly, JP Morgan, Jamie Dimon came out with an incredibly positive. I mean, you remember how he used to be negative on things and always kind of,
Right.
This guy never talked as glowingly ever in his life as he did just today. I mean, he's just raving about the economy, saying he's never seen anything like it. and that the confidence has returned, and the stock's up $5, and just you know, it's almost like never been better, and as good as it gets, as good as it's ever been. So and you know, look, one of the things that is going on behind the scenes on a cumulative basis is, you know, when you've got more people working than ever before in history right now in many states and in the whole country as it is. I mean, you know, theoretically we should have the tightest economy ever, because if more people are working than ever, it's more GDP, it's more output, it's more production, and it's more demand. I mean, it's just creating demand on everything, including transport and planes and trains and buses and everything like that. So, and Ubers and every form of transport imaginable. So it's including trucking stuff and trains, all the train traffic that goes on. So it's really an economy that's running on all cylinders.
Speaking of Uber, John, I heard some financial talk show the other day, someone made the statement that I think in less than 20 years, I forget what date they gave, that owning a car, actually owning a vehicle, owning a car, will be sort of quaint. It'll be like people who own horses now.
You know, I think, look, people are obsessed with cars, and there's a passion for cars. I mean, you know, no matter what kind of a car you have, most people, once they have a car, it's kind of their little thing, and you know, I
agree with you more than the guy I saw on TV, but you know, there's people in like New York City, for instance.
Yeah. I mean, look, you know, owning a car in New York City is kind of almost a liability.
San Francisco, I think, is even worse.
Yeah. So, you know, and where the transportation is good, and you know, it's smart to use alternative means, and then parking and all these other issues. It's probably the same in London. And now they've started a new deal over there. This mayor, who's very unpopular, has got a deal where they're charging like $12 or something for clunkers to drive into town. I don't think there's, you know, if you're a kind of an older car, I think you have to pay some sort of a premium just to drive through the center of the city, and things like that. So, by the way, the VIX, I'm looking at the VIX here, making new record lows, practically, not necessarily on the VIX itself, but the TVIX is heading lower, and it certainly looks like we could accelerate to the downside here in the next few days, because if there's any kind of gap up move next week, you know, usually when the first earnings come out and they're upside surprise or they're good earnings, they tend to be good for at least the first half of the earnings. Sometimes the second half of the earnings can be a little bit of a, you know, disappointment or even a shocker. But generally, when Alcoa and some of these other companies come out and report good numbers, and the banks, it definitely sends a positive tone. There's something that came out. Kudlow, I think it was Kudlow, said a couple of days ago. He came out with some wacky statement, which is kind of unexpected. He said he doesn't expect to see rates rise the rest of his lifetime, and I think that's a
yeah.
I mean, I don't know whether he was joking or what, but that's a little bit like Janet Yellen saying, you know, corrections are a thing of the past, right before you know, we had last year's correction, and you know, we can handle everything from here on out, you know. So you have to be a bit careful when people start talking like that. But I think the big surprise actually is what I've been saying all along, which, you know, according to Jamie Dimon, I'm being proven, you know, prescient by saying it before he came out, because I've been saying a lot of that the economy is getting stronger, and it really is. And if the economy is going to get stronger, there's a really, really good chance that rates will rise, and maybe rise possibly uncontrollably for some reason before the end of the year. remember, my timeline is from 1976 to 1979. You know, the gold didn't start accelerating. It didn't double or quadruple, rather, until sort of, early, started in early 79 and took half a year before it really took off. The last 6 months of 79 going into 80 was when gold just went, crazy. I mean, yesterday, the PPI came out, 3% month over month, and
right.
That's a high number, and they deliberately smashed the gold down to stop, a buying panic, I guess. And, but that's there in the background, and the fact that the copper was able to rally as much as it did today, and also the lumber, by the way, and the platinum was up about $9. It's come off a bit, and the dollar was weaker earlier on. What we were saying yesterday actually came true, that the European currencies might react more positively to the Brexit. They did for a while this morning, but they just went into a slump again. So, they're not ready to go yet, but it feels like they're pushing to try and get a rally going, and look, they couldn't knock the gold down today, so that's kind of a bit of a plus. The silver in particular is up. I mean, silver's up 10 cents. That's a sign of a stronger economy right there. And I think if silver can lead the way higher in the next few days, that would be, that might pull the gold back from what happened yesterday. And if it does, I mean, I'm telling you, the next time we go up around 13.15 or so, I think it's a mandatory buy the gold, because I think one more shot up at that level might be a sign that we're going to push through and possibly accelerate to the upside. So there is, as this economy gets stronger, I think that it could be a move. It could help move the metals markets because of interest rate rises. And the Fed, are the Fed behind the curve? They could be, because this inflation could come from behind, right out of the blue. There's already wage inflation going on, and asset inflation is virtually inevitable. Listen, there's asset inflation going on all the time. I mean, anybody who shops knows that it costs 4 times, a tube of toothpaste costs 4 times what it did back in 2000. A loaf of bread isn't far off, and there's a whole bunch of stuff. I mean, there's hardly anything that hasn't gone up by at least 50% to 400% in the last 20 years. And that hasn't been properly reflected in other asset prices. So, especially gold and silver. So, the potential upside from here is pretty much baked in the cake. It's only a matter of time, and I've been thinking ahead. We talked about this possible early 2021, 2022 could be looking at some sort of an unexpected crash of some sort. Something really dramatic that might see gold soar, many thousands of dollars. And if you think of it this way, I mean, the 2020 scenario right now looks better and better for President Trump, especially with these new ratings coming in at 55 and 58 or better.
I think he was even surprised by those numbers.
Yeah. Well, it's
I think he
it
was.
takes time for it's funny, these polls, they don't sort of react overnight. It takes time for things to sort of sink in, I guess. But I think more and more people, these days are realizing that Trump's doing a lot of good things. I mean, he's been proven right on just about everything, including the spying. And if that blows up, I mean, then that he's going to be vindicated beyond belief. So but I think, we could have a landslide in 2020, possibly take back the House with a big majority, and maybe even get as many as 60 seats in the Senate, possibly, and really, sort of an overwhelming landslide. But I think, come 2022, you might get the same kind of reaction that we had in 18, where you might just, some of these big gains might be reversed. And given what happened to the market after the 18 election, going into the 2018 election in the fear of the Democrats getting control of the House. The same thing could happen in 2022, and it might be much more severe than what we just had. And because there may be some other issues that compound that, including a weaker dollar possibly by then, where we might just go, have a really, really serious correction that could take us back towards the 2009 levels. But the Fed will step in and they will do the last kind of big ramp of all time, just like they did in 1922. And then we have and set the stage for the roaring 20s of the 21st century, where we could really have an amazing rally all the way through to the end of the 1929, 1930. And as you know, as I've said already on this show, I think the big problem, the depression of the 21st century is probably going to come from automation, not in the next year or two, as a lot of people fear. It's probably going to take about 10 years for the automation to really, start losing, millions of jobs. Because really, if you think about it, in 10 years' time, self-driving trucks and cars and things like that are probably going to be standard, and many other things, many other industries are going to be affected by automation. They've got a computer now. IBM just announced yesterday they've got some sort of a personnel management system that can replace 30% of HR, just like that. Bang.
Yeah, so, I heard something about that.
Yeah. So, we're living in a world, there's a lot of tremendous uncertainty in the future as to how the automation thing is going to unfold. But I think when you look at it in the timeline, it certainly would be a kind of a legitimate excuse for a major slowdown in maybe in the 30s of this era. So, but right now, it certainly looks, even Ray Dalio seems to think that we've got a couple of good years still ahead of us here, and we should enjoy them while they're with us.
Amen. Every day, enjoy every day. Most people
live every day as if it's your last.
That's
One
right.
day you'll be right.
Most people spend most of their time lamenting over the past or worrying about the future. It's kind of a novel idea to actually be here now. I didn't coin that phrase. But when you think about it, this moment, it's really all we have. We got memories of yesterday, hopes for tomorrow, but rather than spend time in your head in those places, if you can just focus your attention on today, on life, on this moment, whatever it is you're doing, even if you're washing dishes or taking out the garbage, do it with purpose.
Yeah. Absolutely.
Be here now. We are like 30 points, I believe, depending on whose numbers you look at, about 30 points off the all-time high in the S&P.
Yeah, this is that. So with this tweet I put out this morning, I just had to do it because I probably should have done it sooner. But anyway, when you're getting this close, it's usually gonna happen. Especially if we, and don't forget this. There's another thing is I believe the Europeans pulled off a pretty big deal with China over the last couple of days, and I think the market's getting some traction from that too. And by the way, the Nikkei is up big today too. So the Europeans markets are up. These markets are off their highs a bit, but if they can claw their way back towards the highs of the day and finish the week, right on the high, effectively, there's nothing more bullish than closing up on a Friday at the end of a good week and a good month and a good quarter. It's just as good as it gets. And this market's it's one of the most phenomenal markets we've ever seen. It's just the way that it has this propensity to keep going. And remember, the advanced decline line continues to make new highs. And that's incredibly bullish. Look, for most of the 90s, the thing that I keep going back to this periodically, when you say how could 6 really smart people, including Joe Granville and Michael Metz and even Ross Perot and Gail Dudak and I forget who the other 2 were. Prechter was one, I think, and somebody else. You know, these 6 pretty renowned analysts, you know, were, I mean, Prechter did something similar to ourselves. I think he made 80 times his money in trading options in a relatively short period of time. We made 120 times over a similar period, but Prechter kind of went off the rails, and I know him personally, he's a good guy, but you know, for a lot of the 90s, a lot of people miscalculated because the advanced decline line wasn't making new highs the way it has been in this decade. You know, it's just been unreal. And one of the things that didn't happen in this decade, which I pointed out the other day, is for most of this decade, one of the sort of head scratches was that there wasn't a premium. I guess the smash down in 2009 was so severe that the market just couldn't get to a premium situation, i.e. where the futures have a, you know, maybe the S&P has a 5-point premium over the futures, over the cash. And normally when you trade at a discount, you know, it's sort of a negative, but we actually went through most of this, you know, pre-Trump rally at a discount, but post-Trump we've kind of gone to a premium, and that's actually pretty bullish. You know,
I show the S&P cash at 29.10. Is that correct? 29.10, and futures, I've got them at 29.
Well, actually, they're 29.10 as well today.
Yeah,
so the premium is not. It's premium. It was there a week or 2 ago, but maybe it's pulled back a little bit. But at least it's not at a discount.
But when the new contract comes out, like when we first rolled over to June, there's the largest discrepancy there. And as the contract ages, don't they tend to get close? The prices get closer together.
I guess so. Yeah. Look, I mean, usually when you go to a new month, it's usually at a premium. It's usually at a premium to the previous futures, and if it isn't, then it's a kind of a worry, you know. But
now I know that people, you know, do stuff with options, out of the money type things all the time, but I looked the other day. I brought it up just to see what it looked like, and ESZ. Actually, that's not the one I wanted. Let's see. ES. Here we go. Here's one like out next year. ESH. Okay, 2020. Okay. I mean, there's hardly anything there. How common is it for people to buy futures that far out?
It's pretty rare. Some, you know, there's obviously trading. It's more of a. Is that a daily or a
no, John? Let me put it on daily. Thank you. There we go. Daily is still.
Yeah, they're just marking the stock more or less. So there's very little trading goes on in those things. You can see it's just starting to get some volume in. You're probably better off looking at December.
Yeah, let's do that.
This year.
ESZ9.
So we got a 10-point premium, you know, there right now on the December contract.
Well, and that's kind of a long time to tie your money up.
Can you get some history on that? See, is there any?
Well, no, because it's the December contract of 2009. This is the history. If we wanted, we'd have to go to the continuous at ES.
I could put up the continuous. That might be interesting to take a look at that, if you wouldn't mind.
Sure. Okay, there we go.
That looks pretty good.
That's the continuous on a daily. Well, it's it's.
If you squeeze it up to see how it looks with the previous high, it might be closer to a high than you think.
Let me just show you on this chart. Okay, here's daily using the continuous symbol. This is where we had the bearish cross last October that led to the worst December since 1931, and we've reclaimed.
So this is a pretty significant. You know, we're basically above that right now.
This is big. I mean, The first time I saw the market put in a...
This thing could go parabolic from here. If it were to sort of arc up, it could really run big here into run big into the summer, as we've been saying, without a pullback possibly. So,
well, every pullback in this rally has been so shallow. We haven't even had a 24% Fibonacci retracement. I think if we do get up here, and maybe we do put in a slightly higher high, because the first time I watched futures put in a new high, I think it was when it hit that 1550, and then I watched it fall to 666. I mean, that's pretty dramatic. That was huge. But if I had it up earlier, let me bring that back.
The 2950 is the number to get to a new high, I guess. Pretty much, yeah.
Pretty much, yeah. So on this chart here, what have I got it on? Day? I'm gonna put it on monthly. I'll put it on weekly. Okay. So we're looking. Look
at that. That's amazing. That thing.
It is. And so when the bottom fell out back in 2007, yeah. So here we were at that 1500 area, and then here's that drop to 666. Now the .com crash was right here. It shows up better, I think, on the monthly. Let me do that. Okay. All right. So this was the .com crash. This was I call it the real estate crash, the subprime lending crash. Right? We even put in we had looks like a higher high there and a lower low. But once this thing, look at that.
Yeah. I mean, the thing that could be when everybody's been dead wrong, because a lot of people think this is some kind of a fifth wave, but it's actually more like a third wave, because the fact that the advanced decline is making new highs and leading the market higher is very symptomatic of a third wave. If it was a fifth wave, the breadth, might be a lot narrower, so in other words, only the leaders would be making new highs. But this is all in, everybody's sort of making new highs. That's the body of the market, if you like, and that's incredibly bullish when that happens. So the semiconductors might be worth taking a look at them. They're hitting new highs today. SOXL.
SOXO.
L. Sorry. L.
Okay.
Yeah.
Gotcha.
Yeah, you see the power of that move. I mean, you can almost visualize that thing just just continuing to go higher.
This is a daily chart. Yeah, so we're coming up against, are these all-time highs here?
Yeah.
Oh, no, there's one back there.
Yeah. I mean, they've got I mean, the next 40 points are going to be, a tough job, for this contract to get, for this thing to get to a new high. But the power of this thing, especially with the gaps, look at the breakaway gaps on these things. It really looks very dynamic indeed. And the reversals, I mean, the whole thing looks extremely positive. And you might put up the Xilinx, see how that's doing today, XLNX. New high again, look at that, amazing. Wow.
What was the other one we looked at yesterday? The
keys.
Madrigal, I think we looked at yesterday.
Yeah, right. I think they're probably still, yeah. Oh, that's breaking out, look at that, wow. Yeah. I think that's going to be 100. It'll probably be 100 before the end of the month. It's probably going to go once it breaks 100. This thing could run to 120. So it's a very powerful situation. You could check ICPT if you like.
Sure.
I'm not doing much.
ICPT.
Oh, it's getting pounded. It's even worse today. Yeah.
That's daily.
Yeah.
My goodness.
Yeah.
But when this thing moves, it moves.
It really does. Really does. Yeah. So there's some grim news out on that, and actually they were saying that I think a fifth of Britain's teenagers have the problem, this fatty liver problem, maybe because they've been drinking too much as teenagers and obese. That are obese. Maybe it's one fifth of obese teenagers have this problem. But I guess that Madrigal is going the same way today, probably. It's getting
MDGL.
Yeah, they're getting annihilated. So it's an interesting dynamic because we've got the market is going higher, right? And yet the drugs are going the opposite direction, like we said yesterday, the pharmaceuticals. So that shows you how strong the market is. The market's going up, notwithstanding what's going on in the pharma area. And they're all down. They're all, most of them getting hammered, one form or another.
Yeah, it sure looks like it. Anything else you want to cover?
No, listen, thanks very much for the invite. It's the 1000th Formula One Grand Prix race this weekend in China. And I think that's a must-see event.
Yeah, I bet. Yeah, I know you love that.
1,000. That's a lot.
That's a lot.
That's a lot of races.
Yeah, that's a lot. All right, John. I'll talk to you later this afternoon or tomorrow.
All right, much obliged.
Whenever you want, okay?
Have a great weekend, everybody.
You too. All right. Talk to you soon. Bye-bye.
All right. Bye.
We're looking at the Dow now. I've always wondered, is the Dow a cash cow? Wow, how the mighty have fallen. Oh, maybe because I didn't put a space. We used to be number one for that. Is the Dow a cash cow? Man, that's embarrassing. I did this on live radio. Maybe we should. Here we go.
There we go.
Is the Dow? Yeah, I had to throw CFR. I didn't used to have to do that.
Maybe you should have put, is the Dow a cash cow futures? You wouldn't have.
Yeah, we would definitely. We would knock it out of the park there.
There you go.
Yeah, there you go.
What is the date on that?
The date of that was
2011, July 14th, 2011. Wow.
How do I get rid of the guy? Oh, there we go.
I don't know.
There we go. 2011. Yeah. So this would have been right around when we launched this particular site, when we moved from the other site to this site. Anyway. Okay. Guys, I'm not going to hold you up putting all the zones on all of these. They got wiped out. Oh, but if you haven't backed up your platform today, maybe you should, right? Because you might be like me, and I don't know, has your computer restarted itself since the other day?
No, not since the other day. It's good now. It's still good.
Yeah, that's just weird. So the next zone down would be 26415, which is right there. Just point it out. 26415. 15/20. Then below that is 26,300. I'm just throwing these up, folks, just to kind of give you an idea, because you saw it on the S&P. We went over that real good. 26,150. Okay. All right, and this week started Sunday night, the 7th. So let's scoot it up to the 7th. Okay, back here. That's the 5th. Yeah, here we go. So price opened Sunday night right at a zone, and then it went to the zone, hung around the zone, and dropped to the next zone and hung around, and then went back to the zone, up to the zone, down to the zone, and now back up to the zone. Quite a week. These are not correct at all. I hear you say you placed a trade on the Russell in the training room today?
I did. It was a break-even trade, but I did.
Wow.
Yeah,
So
well, nothing was moving, so I thought maybe the Russell bounce around a little bit. And
I think I would enjoy trading the DAX, but it just doesn't make sense that it's $12,000 margin. Is that what it is?
Yeah, something like that. It's a huge margin, and you know the thing about that is, you know, our followers, the majority of our partners, and everybody that's following what we say, you know, and try to help them along with, a lot of them don't have 12 grand in their account.
Yeah.
So
right. That's true.
You know, that's why we don't add things with the huge margins like that.
Okay. Now, okay, this is, I didn't bring up Daniels, I just brought up something else so we could compare. But here's the Dow, $500, we know that. And then the DAX, it's in here somewhere, right here. The DAX. Okay, it's not as bad as well, the maintenance is 22,000. Goodness gracious. 2,500 intraday. Now, this guy, I don't know anything about it. The stocks, Europe 600. That has intraday margins of 400.
Look at that bad boy down there, the Nikkei. Osaka. 5 grand.
Yeah, those mini, they never move. Hey, has that new S&P contract, is it live yet? Has Bert mentioned it? Remember we talked about it. Bert sent me that thing, and I sent it to you.
Yeah.
I
don't know if it's live.
I've got that thing right here, I think. Let me find Bert's message to me. That's another great thing about Telegram, guys. You know, somebody sends you a message. It's documented. It's there. You don't have to delete it. You don't have to worry about storage space. I mean, Bert sent me a message long ago. All I got to do is go to that conversation and scroll up, and in there I'll find it. Although I think I have 2 addresses for him. Did you do any thinking about our new Swiss office? Just kidding. After I showed that to you last night, I sent you the link. I put it in Telegram again.
You did. You sent Valerie and myself the link. That would be something. That would be something.
You know, by golly, he must have sent it to me in a different channel, because I don't see it in here. Well, I'll just ask my friend the internet. And what were some of these others? I wanted to look at the Taiwan Stock Index, the Mini Hang Seng. $500. Just wonder if there's any participation. HHI. I don't think we have access to that.
I don't know. Mike B said, "What do you guys think about the micros?" I think that there's not much liquidity is an issue with the micros.
Yeah.
That's pretty much the case.
HHI. Yeah, we got nothing. That's all natural gas. Well, let's see. There's a lookup tool, right? Yeah. So, hang. Oh, we got nothing. Well, not that desperate about it.
Yeah.
I just don't. Now, what's one of the mini symbols that we do know? I mean, there's many soybeans, right?
Yeah, there's mini soybeans. There's a mini. I think there's a mini gold, a mini ES.
What do they start
There's
with?
a mini crude too.
What letter do they start with? Is it an M? I can't. Is anybody in the chat box?
I don't know. I don't know. I know the last time that I looked at a mini. Last time I looked at a mini.
Well, yeah, there was a huge spread. Very little volume.
Spread. Yeah, there was a spread, and so that means if you want to buy, like, let's say right now I'm looking at your ES, and if I wanted to buy at 29.0925, is that right? Yeah, that's where it is. And if there was a spread, and say the spread went up to 29.16, you get an entry at 29.16, and so it's like Forex plus you're paying the commission. And Forex.
Well, let me just ask my friend the internet.
Hey, my blood pressure is really good today, Mike B. Just want to let you know.
Daniel's mini gold.
117 over 83, I think. 112 over 76, even better. I took a picture of it. It was so good.
Emini Gold Futures. That's Mini Gold Future on the ICE exchange. Okay. ICE BB ICE. So just give me a symbol. If you see it, shout it out. YG. We'll try that. YG. It's got to have something before it, I guess. Hey, Bert, where are you? YG. Oh, I know what we'll do. We'll do it this way. Okay. Okay. Now, go to Resources, Contract Specifications, go down to Metals. Oh, there's a mini soybean right there. And is it giving you everything but the symbol? Looks like
it's giving you the months. It's giving you. Hang on. Let me go to. Let me help you. Let me go over here. Where is that thing? There it is.
It already passed metals.
It is. Contract specs.
All right. Metals must be this one.
Market group. Energies, grains, metals. Here's metals. All right, there's Emini Gold.
Okay, where'd you find metals? At the top or at the bottom?
MGC. Yeah, it's right. It's right at the top. MGC, Emini Gold.
MGC.
I'm sorry, E Micro Gold. MGC.
Oh, so there's a mini and a micro. Is that right?
Yeah. Yep.
So it would be MGC. What month are we in now?
On gold,
yeah, we
are in K. No, M. Right, M.
Okay.
That's the micro gold. The E mini gold is QO.
Okay. Now, on a daily chart, it looks like so far today 7,287 contracts traded. On yesterday, April the 11th, almost 13,000 contracts. What were some of those other symbols? What did you have?
QO. QO is the mini gold.
Q mini New York Gold. I don't know if that's the right one or not, but
I'm guessing no.
I guess not.
Hang on, where did I have that?
Well, here's mini copper.
Oh, it's on a website.
That must be an expired. Okay, I'll take the top one.
Like mini silver. On ice, mini gold is ZYG. ZYG. Okay, you got nothing there. Okay.
I got nothing.
Palladium,
This is
GPA,
ZS.
platinum.
What is this
GPL.
down here? This ZS FM9. That traded 56 contracts so far today.
56.
56.
Okay. That's
Okay, so back. I was on the Daniels.
yeah, go back to the Daniels site.
Yeah.
It's good. It's easier to follow. Indices. There's currencies.
Must be the other way.
Australian dollar.
Energy, food and fiber, grains. There's the mini-sized soybeans. Oh, minus the symbol.
Mini wheat, mini soybeans. XB is mini soybeans.
The mini-size. Well, the mini Dow is what we actually look at. Is the $5 one.
Right.
$5 a point.
Yeah, the mini Dow and the mini ES.
Hang Seng
mini
is HKFE.
Mini soybeans is XB. HKFE.
It doesn't seem to show up. What was the one you were just trying to get me for soybeans?
XB.
XB.
XB9, I think, right there.
Yeah.
Right there.
Okay.
That's a mini soybean.
And we've traded 149 contracts today.
Yeah, not a lot of action there.
Compared to...
Well, I mean, put it on, well...
The full-size soybean is... We've traded 45,000 contracts today by comparison.
A little bit different. So there's going to be a huge spread in the XB.
Yeah. Yeah. So this new contract that's coming out, I don't know why they're bringing out a new mini type contract, because the old one never took off. So,
yeah. Who knows?
Yeah.
Somebody's going to make money from it.
Hey guys, right here on the NQ, this is a little bit important. Leg, retrace, spiked it, pulled back up to it. So now we've got the red and falling, the BBC, and that little doji right there. I know that all of our traders know this, but for those who maybe don't, the high probability thing from here is a move down into the support area right here. And what we teach folks, our methodology and our indicators that work with our methodology, it really is that simple. Again, we're not fortune tellers. We're not even forecasters. All we know is what the next high probability thing is. Doesn't mean it's always going to happen, but we always know. And in that knowing, there's a certain amount of peace, I guess, be a good word for it. I wrote something last night in the, oh yeah, this is good. We'll end on this today. All right, let me drag this up. Here we go. S&P Cash Index yesterday, this is a 30-minute chart. This was at the close. Okay, that was the close. Now, here is SPX. 30-minute.
Wow. There's a gap there.
Quite a gap. Okay. So, looks like that may turn into a head fake. Did not. A head fake, for those that don't know, is when you have a bullish or bearish cross that reverses before it gives you a setup. It is often the first sign of an untradeable market. If you're a surfer and you go to the beach and there are no waves, do you still go surfing? If you're a trader and the market you want to trade looks like this, like that.
Like that.
Price was above and then below, then above, then below. above the BBC, below, above, below, above. You see, it can't make up its mind. The market itself is looking for direction. There is no high probability trade setup anywhere in there. Okay? If you're a trader and the market you want to trade looks like this, go surfing. Just don't trade. Fortunes have been lost because many people are taught trade setups, but no one ever taught them to check the condition of the market. A surfer's first thing each morning is to check the weather report. That tells him whether or not to put on the zoot suit. Keep in mind, a meteorologist looked at a chart to produce the forecast, which is the high probability thing, that kept the surfer from wasting his time and gas going to a flat ocean. Everyone teaches trade setups, but has anyone ever taught you how not to trade? And then there's a shameless plug, book a mentoring session, free. So I guess it's not a shameless plug. It's deep generosity, I suppose. I don't know. But anyway, any of you folks here, let me just copy that link. Anybody that's in the audience today, if you'd like to spend a little time one-on-one, I'd be happy to spend a little time with you. Just go to the link I'm putting into the chat box right now and book a session. It's that simple. Let's see. Remember, what you see and experience here, everything that we do and have done for over a decade, is fluid across every time frame and every market. You may have been told you can't trade crude in the ES same way, or copper and live cattle. It isn't true. I talked about that earlier, and I talked about the personalities. And so if I can help you, whether you become a partner or passport holder, that's up to you. But if I can help you, if I can give you just a little bit of clarity, in the 45 minutes that we spend together in that free mentoring session, if I can give you a couple of things that Michael and I believe to be market truths, and I'm going to tell you when I give it to you, when I give you these market truths, I want to say, hey, now, don't just believe it because I said it. I want you to take it and go put it to the test. Drag it out in the light of day. See if it stands up and salutes. Otherwise, it's worthless. I ask people all the time, well, why do you believe that? And they go, some guy said it at a seminar, I read it in a book. That's no good. You don't own that, You can't be in the zone. You can't be one with that thing because you got it off somebody else. It's their thing. You can make it your thing, just like the zones, right? Me sending the zones out to all the partners and passport holders every Monday morning at 6:15 a.m. Eastern. If they don't make those zones their own, if they don't learn how to read them and trade them with my help, they're worthless. Might even cause you more trouble than good. So anyway, long show, been rambling a lot. It's time. I'm a celebrity. Get me out of here. Remember that TV show? It was only on for one season. Blagovich's wife was on there.
No.
The guy, the governor of Illinois that tried to sell Obama's vacated Senate seat.
No.
He's in prison now.
No.
Yeah.
Is he?
Yep. All right, folks. Today, 2 Timothy 4:2. Oh, and Val, if you're still out there, would you put that link in again to the Q&A session this afternoon? 2 Timothy 4:2. In season and out of season. We all know that if you sow your seed at the wrong time, you risk losing your harvest. Why? Because you didn't recognize what season you were in. Sounds a little bit like what I was just talking about with, did anyone ever tell you not only what a trade setup looks like, but did anyone ever teach you about this? That's a deadly thing right there. You got to recognize the season, the conditions of the market. And I've seen many people, they beat themselves up. They go back to the drawing board. They start from scratch because they think they messed up and got it all wrong. They didn't. The market just was not conducive to trading. No waves, you can't surf. So ask yourself, what season are you in? What season is your trading in? Are you in a season of small beginnings? If you are, God says, do not despise these small beginnings. That's Zechariah 4:10. The richness and stability that comes from small beginnings and gradual success are more lasting than the temperamental theatrics of those who have never learned their own vulnerabilities or developed a true sense of dependence on God. Now, if you're not sure what season you're in, and you are in a season, we all are, you could ask God, the season maker. He does everything according to a set time and purpose. In autumn, you break up the ground, turn the sod, sow the seed, add the fertilizer, and you look for the harvest next spring. In the meantime, you wait, because the soil that has yielded so many of its nutrients is being replenished. The fertilizer that smells so bad is in the process of producing the highest quality crop. The root system that's required for strong, healthy growth is being developed. Understand this. God gives you grace for the season you're in, not the one you were once in, and not the one you'd like to be in. His grace is for whatever season you're in right now. When Paul said, "Be prepared in season and out of season," he recognized that he was in the winter of his ministry. That's why he was pouring his knowledge into his successor, Timothy. Paul wasn't resentful about the changing season. When his days as a player were over, he simply became a coach. That's what he did. What season are you in? Are you a player? Is it time to be a coach? Be aware of your surroundings. That's really what this is about. When you wake up each day, assess the situation. When you sit down in front of a chart because you're a trader and you know you should be trading, that's a falsehood. Take inventory. Oh, Tim, come on, you know better than that. Always be aware of your surroundings. In the market, in life, in your marriage, in your relationship with God. Take a minute to be here, right now. Get out of the past because you can't change it. And don't worry about the future because you can't know it. But what you can do, and what you can do real good, is be right here, right now. And when it comes to trading, trade what's in front of you, not what should be, what the guy on the TV said would be, or you think should be. You got to accept it for what it is. When this thing starts climbing, no matter how wrong I think that might be, because I got a laundry list of reasons why it should go down. It's just an example. I can deny that the market's moving higher. I can go short all up through here and just get slaughtered. Oh, Tim, you just reminded me of something. I want to show everybody this. Let me find it real quick. I was really quite fascinated by this, Tim. I think all of you know that, well, maybe you don't. Tim lives in Bali. It's in Indonesia. These little houses right here, check this out. This all-teak house, $15,000 complete, built on your property. Look at these little, look at that. This is all the same one, but look at that. Isn't that charming?
My dad loves that.
Look at this. This is teak wood.
Something that's like 800 square feet. Perfect.
Yeah. Well, this one's
got a bedroom. It's got a bathroom. It's got a kitchen.
That's all you need. A couch.
That's all you need. Yeah, couch in the living room.
This is Emily, my daughter. She wanted this one.
That's pretty.
All these are about $20,000. All that I just scrolled past. All teak with ironwood, tongue and groove flooring, and you got to bring your own land. That price does not include the land. He sent us a picture the other day in the channel of like a rice paddy by his house. Here's the construction phase. He's going to send me some more interior shots. Problem over there is you can't own property. I think that's what you said, right, Tim? You can't own real estate. In Mexico, you can't own real estate within so many miles of the coast. If you get into the interior of Mexico, an American can own land there. But anything, I think it's 100 miles in from the coast, you have to get what they call a bank trust. Like the property that we have down there where the mission is, it's ours for 99 years from the day we signed that lease. And I've always wondered, okay, after 99 years, when that thing expires, then what happens? Well, nobody knows, because since the first lease was issued, it hasn't been 99 years yet. Is the government just going to let you renew it? Or are they going to take it from you? No one knows. So, all right. This was the show. That was our good word for the day. This is my friend Michael. Michael, say hi to the people. Or say bye. You ready to go? I'm ready. All right, guys. It's the weekend. Oh, we have a 5 p.m. Eastern. 5 p.m. Eastern.
5 p.m. Eastern.
Q&A session.
3 hours from now.
If you want. Now, being that it is the weekend, our charter says that you must, as part of the community, spend quality time with your family. And, of course, I'll see you in church on Sunday. Right?
Sunday.
All right.
Absolutely.
Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And we'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.